Standard & Poor's said today that U.S. home prices fell 4.1% in July from a year ago. But the rating agency's Case-Shiller index also shows a 0.9% rise in prices from the month before. Joining us now is the co-founder of the S&P Case-Shiller Index, macro markets chief economist and Yale economics professor, Bob Shiller. Bob, good to have you back with us. So the data today tells you what about the housing market? Anything new, or just a reminder of how bad it is still?
It's not really new. I mean, on a seasonally adjusted basis, the latest month was a zero change. Nothing happening. You might call that normal, right? But I'm not sure things are normal. It's a very uncertain market now.
Well, it's interesting because, the stories that I've been reading, it says, actually came in better than expected, beating estimates, prices in all 20 cities rose. Does that mean to you that there's a little bit of optimism out there, or not necessarily?
Well, there's a little bit of optimism. My company, Macro Markets, does a survey of professional forecasters, and the average forecast out to 2015 was 1% a year price increase. So you call that optimistic. I don't call it very optimistic. It's like nothing, especially given that inflation might well exceed 1% a year. So in real terms, maybe that's predicting a decline.
I mean, Bob, we've had lots of conversations, Matt, myself, and you, about the housing market. And, it's similar themes. We know it's in a bad way. Questions of whether or not we've yet to see the bottom at this point. I mean, until we see the labor market improve, can we really see any kind of significant improvement in the housing market?
Yeah, I think that's a very important thing to bring up, because right now people have more employment uncertainty than within any memory. Long-term unemployment is almost 4% now. It's usually like 1%. That's 27 weeks are over. A lot of people are just nervous that they might lose their job and then they won't be able to get something comparable. So they're not in the mood to buy a new house. Maybe they'll move, to another comparable house, but they're not going after some bigger, better property.
Professor Shiller, I got to ask you, with all these houses that have been held in inventory and no one's living there, part of the concern as a buyer is there might be repairs. There could be thousands of dollars. So is that part of the problem, and maybe why people aren't buying up these homes that are just sitting there on the market?
Well, that's a good point. People have less incentive to maintain. So, you're sitting in a home that's going to be foreclosed. A year or two later, you're not going to have added much to it because you don't want to do that. So that's part of the reason why residential investment is just in the doldrums now. And it's part of the reason that the economy isn't prospering. It's just one symptom of the general reluctance to spend that we have now.
Well, a couple of economists have actually commented that maybe the way to fix the inventory overhang is to bulldoze houses. Our own Kelly Carlin went out to Cleveland and got images of houses being bulldozed. I mean, is that a legitimate solution? How do you feel about that?
Well, I have not proposed that. It seems awfully wasteful. Reminds me of Franklin Delano Roosevelt having farm animals put to death and just thrown away to keep farm prices up. I mean, we could do that, but it seems a real shame. I think we can find a better way to support the economy than that.
Well, I know it sounds kind of crazy, but I go back to 2008, and Bill Gross on his website actually cited what he called a wise man who talked about actually blowing up something like 1 million homes. I mean, Bob, it all sounds crazy, but it goes to the point that we've got oversupply at this point. I mean, it's going to take a long time to work off this oversupply. I mean, I know it sounds crazy, but what else can we do? Is there some kind of government policy that we need to kind of get this market moving again? What do we need? What drastic measure do we need at this point?
Well, I think that we shouldn't focus directly on the housing market. We should focus on stimulating the economy. I'd like to build things, not tear them down. These houses are valuable. We can spread out more evenly over the existing housing stock. I think we should be building highways, harbors, bridges. This country has an aging infrastructure. Put people back to work, and then they'll be able to buy these houses. Then they'll be happy to move into them.
If we don't see some kind of drastic measure, Bob, I mean, what happens then? In a year from now, are we still talking about the same problem? Are we still waiting for the housing market to bottom, in your view?
Very plausibly. The housing market will be maybe where it is, maybe a little lower, and the economy will still be, something like 9% unemployment. There's a lot of uncertainty right now, you know, and I'd be thankful if it's no more than 9% unemployment.
Right. Hey, one last question, because we've been spending a lot of time today talking about Europe and what's going on in Greece. How much of that is weighing on sentiment, do you think, here in the United States when it comes to the housing market, or that's not really the issue?
I think it is the issue. If you look at the confidence index, like Gallup has a daily confidence index, it was falling throughout the whole budget crisis talks in the United States that was leading up to the August 2 deadline for default on the debt. That was the thing. So it tied America in with Europe. Both Europe and the United States have debt problems, and the public is very much aware of that now, and it's definitely hitting confidence.
Yeah, and as we know, confidence in U.S. consumers stayed near, I think, 2-year lows here in September, so you're absolutely right. Bob, we got to run. Thank you so much.